Greetings traders out there in Traderland. This is the weekend edition, good through Sunday, June 24th, 2012. On Friday, the markets bounced back after one of the largest drops all year. On Thursday, we're down 250 points, and then we bounced back 70 points here on the Dow. And you'll see that the NASDAQ, Russell's both leading the charge. The bank's doing exceptionally well, up 1.8%. The VIX is down 10%. We're at 18. Gold and silver bounce back. Crude oil, nice little rally here at 2% in the positive. And what we see here is new lines, so pay attention to the blue lines. Now this lower line, I'm too early. We don't have an up leg yet, so this is just making the assumption we're going to pop here. But look at this huge red candlestick, this little white one that starts at the low. Okay, so I think we're going to go higher. And if you go back in time, I will show you big drop. We start with the white one at the low, pop up, and then we get a nice pop. Come over here, big drop, equal low, get a nice little pop, and then a nice pop. Drop, equal bodies, pop, pop. So my expectation is a equal bodies, pop, and then pop. However, I think that that will put us right into a rising wedge formation, which should be more bearish than is bullish. Let's look at the Dow. Dow is also in a rising wedge, but again, this lower trend line, I'm not too excited about that one yet because this has not popped up. So this lower trend line doesn't hold near the weight as this upper one does. Let's go to the NASDAQ. Rising wedge. This lower trend line holds a lot more weight. Swing low, and there we are again. This is for sure a rising wedge. We do not have a bearish divergence on any of the MACDs though, so that's going in its favor. And check this out. We have a inverted head and shoulders, shoulder, head, and shoulder. We broke the neckline. Now that neckline's acting as, let me show it to you here. If I were to, whoops, bring this up a little bit. Right here, resistance, resistance, now is support. So this could rally. We're in a nice little uptrend. Big question though is if we go over here to the weekly chart and look at this. On the weekly, we smashed our head at resistance, and this is a major problem. Resistance, resistance, support, 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 resistance. This could easily drop here, gang. We tried to break out to the upside. We could not do so. If I look at the NASDAQ, look at this line. Gang, you're not going to find this anywhere else. I'm showing it to you, though. This goes way back 2007, right here, 2010. And right here, 2012, we try to break over it, couldn't hold it, we come back down. What we have is a shooting star, which is more bearish than it is bullish. And here's the oops, let's go to the S&P. The S&P, we stopped at the 61.8 Fibonacci and dropped. And we are showing a, looks like a, yeah, bearish Harami pattern. And if we go here to the Dow weekly, we stalled out the 20-week moving average. It looks like we could just be heading down here fairly soon. I would actually put this line in right here, coming across. Yep. So let's bring this to the monthly. On the monthly Dow, we are trying to go bullish here, but we have a lower high, lower low. This is a huge trend line we're watching. The S&P. This is, you've been hearing me talk about this for a while, but this area right here, this 1299, 1300 is a ginormous area. If it breaks that, to the markets. The NASDAQ, lower high, lower low, trying to go bullish above the rising 20-month moving average, and the Russell's here below the 20-month moving average, finding resistance. And big area 748. If we go lower than that, whoa, to the markets. And let's take a look here at gold. This is the monthly chart on gold. We're on the wrong side of this major support line. Now we're building this triangle type formation, finding support here, but we close lower yet again here. Well, we have not closed. The mark, we're only the, this is good to the 24th. We got another week or so. But real fragile area where it's sitting right now on the weekly chart on gold. Lower high, lower low. Watch this 100-week moving average. We need to find support there. And on the daily, we get this big M for murder. Take a look at Apple. We're above all major moving averages. A little bull pullback. We could pop here, have a bearish divergence, so that's problematic. Facebook. Listen, you guys were hearing me talk about this falling wedge and entering it on Facebook, and I decided not to. Buyers or non-buyers remorse here. I am kicking myself for not being in this. I should have been in that around here when it broke that trend line, and I didn't like what I was seeing, and I thought, oh, I will step away, and then boom, high base, boom. Going into the weekend, wasn't willing to buy it off of this high base breakout, but it's hard, wow. I wish I was in that one. But anyway, every trader is on a journey. I highly recommend that you lock arms with us, take your journey with us. We'll put you on the right path to successful trading, and we'll help you reach your full goals and help you reach your highest capacity as a trader in the market, so you can trade in the live markets with confidence. But I would first go through the 101 courses. It's a home study, they're free. The 201s, home study, not free, they are advanced, and that will give you all the good stuff. The 101s, be quite frank, that's only for the beginners. If you've been trading a little while, bypass those, get right to the 201s, because you are going to learn a lot in those programs. And I have another mentorship coming up next month, third weekend. So give that some serious consideration. Take care and very safe trading to you.